In 1602, the Dutch East India Company employed hundreds of ships across the world to trade goods like gold, spices, and textiles. These voyages were expensive, and they needed money to fund their explorations. As such, they turned to private individuals to request funds for the voyage. In return, the individuals would get a cut of the profit. This was the creation of what we now know today as the stock market. So, what is the stock market? Stock markets are where investors, comprised of both corporations and the general public, come together to buy and sell shares in public companies. These shares are basically tiny portions of a company, and the goal of the stock market is for the share prices to rise, raising capital for both the investor and the company. Household names you've heard of that are listed on the stock market are Apple, Google, Amazon, Netflix, and thousands more. So, what determines whether a stock price goes up or down? It's simple. The stock market is based on the idea of supply and demand. When more investors buy than sell, the stock price goes up. And if more investors sell than buy, the stock price goes down. There are millions of reasons why investors would buy or sell shares of companies. That's why it's imperative to research and understand the risks when you're investing in a company. So, how do you, the viewer, enter the stock market? Your best bet in the stock market is to invest in an index fund, which is a collection of companies that are merged together into one stock. And it's usually one of the safest ways to invest in the stock market because when you're investing in an index fund, you're basically investing in the market as a whole, which averages an increase of 10% returns per year. An example of an index fund is the S&P 500, which is a collection of the top 500 companies from various industries. Some of these include Walmart, Microsoft, Facebook, Disney, and much more. Now, you also want to start learning more about the market. To do that, you should read investment books and start reading the news to understand how the economy works. I recommend the book The Motley Fool Investment Guide for Teens because it's simple and informative. I would also recommend reading articles from Investopedia because they provide general knowledge on all sectors of finance and investing, and they're basically an encyclopedia for investors. If you invest $100 a month in an index fund for 30 years, by year 30, you can have upwards of $200,000. That shows the potential of the stock market, and I encourage all of you to start investing after this video. Thank you very much, and be sure to like and subscribe.